same thing. I'm just gonna go on a weekly quickly. Weekly, and then after I do this, I know time I've probably been yapping a lot. I'll go on the lower time frames as well, so we can use the lower time frames at M5 and that, because that's where your entry is going to be. So as I said, weekly and daily, just to remind you again, weekly and daily is your direction, right? Then you have 4 hour and 1 hour in between. That is your market structure, and then you have M15 and M30 being your intraday structure. This is the one that you're likely to trade, right? Trading it against that, so that will be your internal, and the external will be your 4H and your 1 hour. Your internal will be the M15 and the M30, but then when you're executing, internal will be M5 and M1, and then your external will be the M30 and M15. But I'll show you here in GU and EU anyway. So now let's look weekly. What do we have? We're bullish. Okay, cool. We know that we went from this low here to this high here, breaking this portion here, which look at this portion here. If we look again, overall we are bearish, right? We broke this. We came from this portion here to this portion here, so we know that. Okay, cool. What was the decisional? The decisional was something like here, right? So we know that the decisional has been broken, so we know we've got a complex pullback going on. We're look 1, 2, and then 3, breaking this portion here. So we know that, bro, where we're reaching is ideally these points here, right? This is the supply zone we're trying to reach. Supply zone we're trying to reach. Okay, cool. If that's the supply zone we're trying to reach, let's go on a daily. Daily, let's find our recent structure. Let me just delete this. Recent structure is, if we look properly, right? We have to look properly. Where's the decisional? I said it was here, right? I said the decisional was somewhere there. Let me see. Yeah, the decisional was somewhere here, even here. But we've broken that. We can see that we broke that. What broke this? It was this portion here, this low, this internal low, made this internal high, and then we came back, mitigated, and then broke this again, right? Broke it here. Cool. See how we also have internal ranges within that. Okay, cool. But we have this BOS here, so that means that this becomes demand because it led to this new BOS. Let me just remove this. That led to this new BOS. Okay, cool. Then what happens? We don't retrace the 50%. If I was to check from here to here, okay, we have the 50%. That's cool. But let's check. Did it mitigate any demand zone that was valid? Maybe it did. This portion here, yes, it did. So this portion is valid. It done the 50%, and we went from this portion here to this portion here, breaking the structure. So this is now the causational one. Where's the demand zone of that? The demand zone will be here. This candle here. Have we tapped that yet? No. So we're in. When we broke this, now let's read it again and find if we're in a main push. So the main push is done. Now let's see if we're in a retracement. I'm gonna make this red because I don't know why I kept doing all the blue ones. Alright, cool. We know that we went from this portion here, right? So this low went and broke this high. But what actually broke this high? It was this low. This low broke that high and broke that the official one as well. So this is where the demand was meant to be. Demand got broken. Okay, so what internal structure broke this? It was this one here. Hence why we mitigated here, and then we kept going down. So we've gone. Let me make it red. I said I was gonna make it red. Damn. Alright, cool. Let me just. So cool. We have this internal range here, right? That came and made this low. This internal high made this high, right? Internal high, lower high made this high. This one came and broke it. Became mitigated, right? So now we know that we're retracing. We're doing a complex pullback retracement. From here, we went and broke this low. What do? We come back, mitigate. Then from here, well, yeah, mitigate. And then from here, we go down, mitigate this portion here. We don't break it yet, but then we go up and then break it now, right? Breaking this portion here. Has it reached this last candle yet? No, it hasn't. So what do? We know that we're still bearish from this portion here to this portion here. So this will become supply, right? Supply, we get in here, we know that we can sell to this portion here. When we sell to this portion, after we tap this portion, what's likely to happen? We have trend line to target. Liquidity has been taken because everyone thought we're bearish, well, bullish, because we've come to this portion here, right? And we're moving up. So if we're taking out all of these guys, now we can go from here and target the next high, which will be here internally. So that's the daily that we're seeing. Okay, cool. I'm gonna work all of this through to the lower time frame. So now we know that was the daily and 4 hour are basically the same thing, right? It's just that 4 hour you see it clearly. You see more candles, meaning that you have more clarity when looking at the candles and that. But cool. So we know that from there, 4H, we can do the same thing. Where's the internal ranges, right? We know that from here we went and broke this portion here, right? Which gave us the internal change, that internal structural change. Let me just make this green. Okay, cool. So we went from this low to this high, then we went from this low to this high, right? Mitigated this portion here. So up, down, down, right? And then this didn't break it, came down, broke it here, right? Came down again, went up, right? So this low, when this low gets broken, we have a change of style delivery for what? A retracement. And we know that the retracement, ideally we can come to the demand zone, this demand zone that has not been tapped into yet. But at the same time, we know that we haven't fully tapped into the lower one. So we know that it could fail, and that's why it's the inducement, because it's telling buyers, let's buy, and then the buyers put their stop loss. One sec, demand zone. This is telling buyers, buy like this, put your stop loss here, right? Enter here, put your stop loss here, or enter anywhere within here with your stop loss here, looking for the next one. And then what happens, we take them out, we take out these early buyers, and then tapping into this portion here, and then we fly. That's why inducements happen, just for your understanding. But now look, we know that we've done the main push, right? It failed to make a high. That's number one. Okay, cool. So it's not bullish. This is not demand zone. Yes, it's broken this portion here, but it did not fulfill a new market structure cycle, which is a breaker structure here. No, it just simply respected the trend line. Yeah, so you have to realize that. So now when we come down, remember, this is the point that led to this. Sorry, this is the point that led to that. Yeah, but this also made another high. You see how this wick here also made breaking this pass here. Cool. When we done that, you see how we mitigated and we failed to make the high. First indication. Now we come down and break this low here. Yes, obviously this portion is the official one that actually made this high, but we haven't made any higher high yet anyway, so we're not really that bullish. So we know that we're retracing, and then that's when you see this. So from this portion here, right, and made that red, so we can see the pullback. Came and broke this portion here, right? After we broke it, what do? Mitigate. Down again, mitigate, down again, compress pullback. Remember, we're retracing. We go up again, mitigate, come up again to mitigate, come down, mitigate again, come down. What do we do now? We don't mitigate straight away, but from here we make a low, and then what do? We invite, go down again, invite buyers in, mitigate. Why is it inviting buyers in now? Because it knows that it's tapped into, I know it's not straight, but it's probably tapped into that fair value gap here. One sec, yeah, see, it's tapped into that fair value gap, and it's enticing buyers. It's enticing them buyers to enter. So now this is on a full H. Let's go on an hourly. We know that we're bearish until we reach it, right? This is the demand zone, but we know that it's flawed anyway. But let's go on an hourly just to see something. So now we're finding our structure. I'm just gonna delete all of this nonsense. So cool, we're finding our structure. What's our structure? See how hourly, when we come and hit that fair value gap right here, see how we go from this point here, right? Break in 1, 2, right? And then what happens? We come down, mitigate this portion here, obviously, I don't know if we go on a M15, M30, maybe you might understand why. M30, cool, let's use M30. So we come down, taking this portion here to break here. This was all supply, but remember it's also liquidity. So we've done taking that, right? We haven't tapped in no demand supply yet, sorry. So then we come down, right? Go up, still don't make a high, come down again, don't make a low, go high, it don't make a high past this. So we come down again, take out this as liquidity, and then we break this portion here. Then what do? Internal liquidity, look, 1, 2, 3, 4, 5, 6, 7, 8, 9, breaks this portion here, mitigate, 10, okay, mitigate, 11, right? What broke this high? This is where you have to be careful, because now what broke this high? This one broke this high. So when we break below that, guess what we have? We're starting to retrace. Think about it. This made a high. So we break it, we're likely to start retracement. That happens during London. So you know that, okay, cool. Currently in London, I can take a reversal trade. Why? Because we've come and met. We've done the main push. We finished it. But we also have now a trend line. Look, trend line of here. Trend line here. And we can enter. We know that we've come down, broken structure, right? Changed states. Well, we broken structure, we changed internal structure. If I go on M15, you'll see what I'm talking about. I'm just going to remove this nastiness and start using this. So we're going up, down, up, well, down, up, down, up, down, up, down. In fact, you can even do this, that, mitigating again, and then went up, came down, mitigated, went up. You can count all these middle ones on it, but I'm just going to count. Let me count it anyway, because when we go on a low time frame, you'll see it. And then we go like this, then we go like this, and then we went all the way up here, right? And then we came down and broke that. So now look, minute wise, what do we have? We have a change of style of delivery. And why is it valid? This has made a main push, so we know that we need to retrace, and we know that we need to come to this demand zone, right? That demand zone there. So this is liquidity. So now look, we we're framing everything together. We know that on a higher time frame, right, structure needs to come. We need to come tap into the zone here. That's one bigger picture. Second picture, right, the second frame or second scene is we have this portion here, right, that made when it made, well, it didn't make a new high, it tapped into supply. Because it tapped into supply is trying to break this low here, and we know that it's valid, it's likely going to break it. But at the same time, this had an internal BOS, so we know that, okay, cool, this is likely price is going to tap into it and then fuel us to go and reach this internal one's low here, I mean supply here. So for example, we go like something like here, full buyers in, go up here, right, and then come back down and then go higher. We know that could be a possibility, or we could just, you know what, start doing something like this, trending here, do something like this, come down, hit it, and then do that, and then we go higher. Is a possibility, right? Is what we can expect. We don't know how it's going to play out, but we know that that's what's going to ideally happen, because that's what the title says. Cool. So now, what do we have? We have the BOS, right? We know that this took out the liquidity, gave us the move, but then we've taken this out. So we now have a bearish move from this portion here to this portion here, and then what do? We go up, right? Induce this portion here, right? And then we come back down, mitigate, fail to go higher, creating more liquidity. And then what do? Come take out this low, tapping into this point here. Remember what I was talking about, of this internal structure. But external, we're waiting for this portion here. Let me just make this green external. You know that this is where the magnet is, right? This is where price wants to come. This portion here is just early buyers. So now we've tapped into the early buyers, hence why we get this push up. But now look what happens. Look, structure wise, London, you could have taken a sell and it was valid, because you know that we've done the main push, right? Haven't retraced yet into this demand zone. We have liquidity waiting for us. So we're now trapping traders in. We induce, show traders that we're bullish, and price is already mitigating, is leaving, so they buy a lot here because they don't want to miss the move. FOMO. We take them in, right? Then we take them out. Then we take out. You see this portion here. People are thinking, okay, cool. Okay, cool. Let me just leave it that simple, innit? Like trend line traders are buyers. Obviously, they enter here, going up. We reach here. Now, when we do this now, right? They're thinking, oh, we're just sweeping liquidity during London, and then we're going higher because the overall bullish is higher. And if they look at it internally, if I was to go something like that hourly, they're seeing it as, yeah, it was this low that made this high. So they're looking for price to come to, at least they're looking for price not to break this low. So now they're using demands like this here, and they're entering like this, thinking, yeah, price is going to go and make a higher, because why? This point made a new higher past this point here. But we understand that, bro, this point did not fully mitigate, so we're likely to come down. Plus we have obviously price to come down to here, so the force to come down is stronger than the force to go up, because it's all internal. So then price comes down and it breaks this point here. So now we know that we have a new one. We broke it, right? We broke it here, but then we have this portion here, or that I said earlier, that also broke this portion here. So we have an internal range that done that. If we look at it on the lower time frame, which is up, down, up, down, up, down, and then this portion here being supply, right? We've hit that supply. Let me just delete everything so you can see it properly. Down. Look, this portion here, let me do it like this. This portion here coming down to break this portion here. We know that we need to retrace into this portion here, and we're likely to make a new lower low. Then do the same thing, and then do that, right? And then what do we have here? Trend line again, for us to target when we tap into this portion here. So when we tap into this portion here, what do you expect price to do? It could just go and target this trend line. One trend line here, right? More trend line here. More trend line there of traders who are uninformed of what is going on in the market. Where is it? But then now you might be thinking, okay, cool, we've got the M15 one, right? How could I have taken a trade here? Let's go on a lower time frame and see. I'm gonna replay it. Stay. Leave. God damn, I think I rubbed that. Oh, it even goes higher, funny enough. But look, if it's going higher, it makes sense, because right, this made a new, I told you it was a demand zone, and we need to come up here, and we've broken this portion here, so we're going higher to these portions here. But if we realize this was the last point, right? This point is what made this, right? It hasn't made it low yet. That's not I'm saying anything yet, but it hasn't made this low yet. I just drew it there, but it hasn't made this low yet. So what could happen? We're just following this. Remember the cycle goes at main push, mitigation, expansion, but expansion might not happen. We might just read this portion here and then come further down. and then do that. Or we might do this, go up here, do exactly what we done here, where we took out these, look, liquidity. First, let's go on M30, liquidity, trend line liquidity, right? And we know that from this point here is what we went and broke this portion here, and this portion here hasn't broken this pass here, so we're still bearish. You can come from, so from this zone here, yes, we can go all the way up to this point here, triggering buyers thinking, yeah, we've mitigated already and we're going higher, because they can also see that, yeah, we're bullish, that from here we made a high, so from here we're likely to make another high. You can come from. And if we look at it, let me just go here. What we could do is we're just generating liquidity, right? We're just generating liquidity, we're just generating liquidity. So we could go from here to here and probably not break it, and then come back down, hit this portion here, and then maybe go. And then when we go and reach this portion here, we're likely to go from here and come all the way down. Or we can just go from here all the way up, break new structure, and then do something like this, go up, hit this portion here, so we can target this portion, because people are going to think we didn't hit this zone here, so they might leave limits in there, and then we might break that and come all the way down. It's scenarios that could go. But anyway, let me show you how we could have taken a trade on a lower time frame at this portion here. Cool, perfect. Lower time frame, let's go. Where was it? It was this one here. Start a new one. Oh yeah, this one here. Okay, cool. So we're gonna go on an M5, because the M5 is where we're looking for momentum. M5 to M1, anywhere in between, it doesn't matter, as long as it's between the M5 and the M1. Same as the M30 and the 30 minutes and the 15 minute. You can use 10 minutes, for example. You can use 15. You can use 13 minutes. Anything below, you can even use 9 minutes if you want, because it all looks the same. It's when you come to 5 minutes that you start seeing more intricacies, where you have internal structures, internal ranges of the M15 and M30, if you know where I'm coming from. But anyway, cool. So M5 now, what do we have? We know that, okay, cool. We have liquidity, Asia high liquidity. And we know that if we break this high, this is not a mitigation, it's simply just a new main push, right? And let's see. So I'm gonna delete all of this. And let's see what happens. How could you have gotten? Same thing as the other one. Okay, so now you're seeing it as, but remember, we've hit this portion here. Did this portion make a new low? No, it didn't. In fact, it respected this portion here, so it's a weak one, so we're likely to take it out. And we took it out here. So this portion here is what made it here, right? But now look, the thing is, we shouldn't break this low here, because this will be the inducement to go higher. But now look, we come and probably break it. We can even go on a lower time frame too, but this would be ideally the demand zone, right? And we know that this has made a high. We need to mitigate and make another high, right? Do we make the other high? Let's see. We don't, right? And we break this portion here. What broke that portion here? It was this zone here. So we know that, okay, cool, this zone, right, could be a supply that we can trade from. Supply. Let's go on a lower time frame, like M1. What do we have? Let's qualify it. We know that we have liquidity taken, right? And then we came all the way down to break this portion here. So what do we need to do? Come up again to mitigate and then go lower. Let's see. If that fails, then we know that, okay, cool, the original one is actually all the way up here. We have one here as well, basically. But in fact, what broke this. Let's find out what broke the mitigation, because when we find that out, we'll be able to know which one is going to hold. So clearly, it wasn't this one. This one's likely to fail. It's the SMT. It's not the one that actually started it. Something else broken already. So this becomes SMT, right? What actually broke this portion here? We will say it would be this portion here, right? This is the actual decisional, bearish decisional. And obviously, you can say from here is when we came down, broke this portion, and then this also came and broke it out. So we can say decisional could be anywhere in between here, right? But ideally, I would use this one here because obviously is the we've got SMT here basically. So let me show you what happens. Let's see. Remember, the SMT can show you can move as well. You know where I'm coming from. But now we've taken the SMT. So we use the SMT basically. That's what we've done. Sometimes we do that. We know the SMT because obviously, ideally, it's the one that actually broke this low. So it is not really SMT. I kind of overlooked it and said it was this portion here. But ideally, yeah, it was this one here. This is the bearish decisional because this is the one that actually lower high that actually led to this lower low. This, yeah, I was just thinking, you know what, mitigation. What actually broke the mitigation? It was this that was broken before, right? But what broke it, we ran above it, and that was the inducement, and we used it to come down. So it is valid. It is valid. So it's not really a SMT. It is actually a decisional. But if I was going off of it internally, in fact, this is the actual low, not this being broken made us bearish. This being broken made us bearish. So this will actually not be an SMT. I got that wrong. So this will be where we tap into that, right? Into this portion here. Oh, this portion here. I don't think we even tapped into it if I check it. But let's go through the time frames. Where was the imbalance? The imbalance was here. So it was actually this candle. She's gonna come from. So we did tap into it, and then we go boom down, hitting this portion here. And then what happened? So that could be in your trade. You're using the same internal. You use the external. We know that we're bearish. Why? Because we're retracing. We're about to retrace right now. We have the first confirmation. So on a lower time frame, you can trade the complex pullback down. And as you see, we went, tapped it, broke it, this low again. This low here. What broke that low? It was this last demand supply zone. Mitigated, break this low, carried on going. So let's see what happens. Carried on going, and this one actually led to this portion here being broken. Then what happened? Let's see. We tapped the actual point here. So now all of this become SMT. Why? Because this portion here is what made this high, right? And then we've come down to mitigate. So now all these supply zones becomes SMT. Hence why I believe we went and took them out like that. Let's see. They become SMT. So New York, let's see, we're reading internal range. This is the recent high that made a low, right? So let's see. And we also know that from this portion here is where we came and broke this low here. So this will be a strong demand zone. I mean supply zone, this portion here, because we haven't got it mitigated yet. So when we come up here, this is where price is likely to pull up to you. If we confirm this break, we know that we have the complex pullback to get there. So let's see. See how we've broken it here, yeah, and then we've changed their delivery. So we're coming to the last demand zone. Where's that last demand zone? It's here. Does it hold? Let's see. Okay, so now we come into the demand zone and we sweep it. We swept it, so we made a new lower low, right? So now this will be the supply, but remember, it's still in that zone. So any supply that is being created is ideally an SMT, and we're going to break it. So now let's see, we break this. Now we have the confirmation, right, that we are bullish. Okay, cool. We have a confirmation we're bullish in the sense of that we have a complex pullback going on to reach this portion here. But externally, if we look at it on an M5 or M15 structure, I should say, this portion here, this made a high, so this is likely to make a new high. You're gonna go from it, and then yeah, using the lower time frames, let's see something. We have the breaker structure, so we know we need to come back down and mitigate something. Oh, we need to come back down and mitigate something. Do we do that? Let's see. And we do, right? We come all the way down to this portion here to mitigate, and then let's see if we get a lower time frame change of style delivery. That will be our low time frame confirmation, which would be a break up here. Do we get that? We don't. So it doesn't mean that just you have it, just take it. You're gonna come from. So we go lower. Where could we possibly go to? We have this zone here, and we have the whole point of interest, right? The whole point of interest. So at this point, I think we've swept the whole, we're about to sweep the whole point of interest. Let's see what happens. Okay, we have a new change of style delivery. Let's see what happens. Does this demand zone hold? It doesn't, right? Okay, cool. Now we break this portion here with Vim, right? With Vim. Mad imbalances and stuff, but you have to realize, yes, it's with Vim, but what led to this low? It was this portion here, this last portion here, right? Oh, this last portion here is what led us to do this. Because if you go on a lower time frame, that's why you don't want to get stuck on the lower time frame too much. Go on a higher time frame, you have this demand zone broken. So if we're bullish, we're meant to break this portion here. If we don't break it, right, yes, the momentum still shows us that this could still become a demand zone you're gonna come from, so we can come and mitigate it. But now let's see. Do we break that portion there? Let's see. Okay, so we break it now. And then what do we have? Where is that internal structure that broke this one here? It was this zone here, right? So if we break this low, right? In fact, it wouldn't even be that. Yeah, it will be that low. If we break this low, we have a change of style delivery, and you can sell down. See how we don't break it? But now we've got liquidities forming. We went here, tapped it. We make a new high? Yes, we did. then we came down, but this low is what actually made this high. So we can also see this, but then we know that this could also fail. Let's see. Let's see what happens. It could make the high and then after that come and break it. We don't know, but it's broken it now. So it's made the high and it's broken it, and we've changed state of delivery. So we know that, yo, we're retracing as we did here. We broke it, we was retracing, but we reached this portion here. Supply weren't really there, so we followed it and broke this portion. That's because this was the low, this was the high that broke this portion here. We came down and then went up. So you see how like you have to link, like this is M1 by the way. You see how there's internal ranges within this. But if I go on the M5 as well, we can also know that this candle was the move that went up here. So then this will ideally be like an M3 structure, or yeah, M3 structure, like one to here, right? And then we came down, mitigated, made a new high. Now it's done, cycle's done. Remember I speak about the cycle where buyers get in, mitigation, expansion, cycle's done. So it's likely to take this out because this didn't mitigate nothing. And now confirm to us that we have a complex pullback going on. Okay, cool. Now we know that we have a pullback going on, right? Let's see. So we come straight away and we don't mitigate nothing yet. This portion we haven't mitigated yet. So this is likely to be an inducement for us to come down, right? And it's not okay, it wasn't an inducement, we just went up. I'm tweaking. We went up and mitigate this portion here, because obviously from that point here, this point here to this point here is bearish. So from here, what are we likely to do? Continue that bearish move because we haven't mitigated this portion here yet. Let's see, and we come and mitigate it. But remember, we've broken this point here anyway. But this could actually hold. You can come from it and go higher. But it could go higher in the sense of we have a complex pullback and go from here to here, or even break that, right? Or mitigate here and then come further down. We don't know. Let's see what happens. Currently, we have an internal bearish structure and we have a bullish structure. So it's kind of like mixed signals. But we know that currently this is the structure we're following because this is internal. So we're likely to be bullish than bearish. But let's see. We break it now, so now we're bearish. So now we have this portion here from here to low, right? Then we have the low. We know that right now. Okay, we've come swept this low, then we broke this high, so we have a complex pullback going on, and that's going to take us to ideally this portion here. And then what happens? Let's see. Damn, taking along. We see how the internal structure is running it. This portion here went up. Here we failed to break this low, went up again. So this is the causation. So we came down, swept this low, went up again, didn't break this high, came down again, failed to break the low, went up again. Which you can come from. So this is the one that actually led to this being to go up. Let's see, when we break that, we confirm a new internal structure. So obviously we've broken this, this has made a new high. So when we break this, this confirms a new structure internally. All right, internally, even this did, because this came, made a little pullback, went up further into this point here, and then we broke it. Mitigation, expansion. So let's see, do these new sellers bring price down? Let me just go on M5 because this is taking a bit long. Ooh. So let me show you. Look, and we keep going down. So now we've broken this point here. So we know that we're retracing, right? We're retracing. We're not even retracing. We're just continuing price to go down because this failed to make a new high. So, but internally, if you're reading it, you can say that we're retracing to this demand zone. Where you gonna come from? Because internally we was bullish and they took us there. So let me just delete all of this. Yeah, we was bullish and it took us. Where you gonna come from? This, but it just failed to. Internally we was bullish, but the external has reached its objective. So the internal has now aligned with the external, and we're likely to break this low following this move. And then that's what happens, I believe. Let's see. So we come up again because we create liquidity. We've mitigated. Let's see what happens. If we break this, that's a new thing now. So now we're looking to, what's it called? We started a complex pullback and we're going further into this portion here because this is the point that led to this low. But we know that, okay, cool. But we're bullish internally. We're bullish. So M15 will be bullish now, I believe. Let me just delete all of this. And that's how you go look at it. So M15 is now bullish, right? And remember, we just broken structure. So there's two scenarios. We can carry on going, or we can come back down, mitigate, and then carry on going to meet this portion here. This portion here, and if that holds, we're likely to follow that and come further down. I don't think it holds, so we come down, same thing. Look, we went from this low here, we went from this low here being the M15 structure. Remember I said we look for, yes, we could go and look for H4 directions and stuff, but if you look at H4 directions, we've currently tapped into this portion here. this portion here being the demand zone. So H4, we've tapped into this portion here. M15, right? We tapped it, changed state of delivery. What cycle changed the delivery was this one here. So we know that any demand zone here we can take, right? M30 to make it precise. Perfect. We have an FEG right there. Tap it, next high, right? Because we know that the complex pullback is going to take us to this portion here. Internally, we're still bearish. However, 4 hour we're bullish. So we're waiting for the internal to turn bullish as well. But we can trade that because you know that within that internal, we also have internal structure, if that makes sense. So yeah, and that's what happens. And then we keep going. This is the low that made a high. Let's see what happens. So we go and officially reach that point there. Let's see, we reached that point there. See how obviously it made a low. So when we reached there, it made a low internally, but when we reached it, see how we had a reaction. But then that's when you have to know which one's powerful. This one's more powerful than this. You're gonna come from. So this is not going to break. It's not going to come down. It's not going to come down. It's not likely to come down and break this. And then what happens if I remove this? We break that. Then we break that. Do we break it? Okay, we don't break it yet. So now we started a complex pullback, right? What is the current internal structure that took us there? It was this one here, right? And we have all of this as liquidity. But if we look at it properly, let's look at M15. M15, we know that we had a push, right? Break in this portion here. We had a test. So this became break and test traders, right? And we're likely to take their liquidity. We take their liquidity, tap into this zone here, because this is the low that made that high, right? Then what do? Does that fail as well? If that fails, we look back. What was the BOS? What broke it? It was this portion here. So this zone here was the last low. So we're likely to take this out as liquidity and use this to go higher. Let's see. Do we get that? That will all change if we break above here. Why is that? Because that was a higher low that made this lower low to tap into this portion here. And if we tapped into this portion here and there was so much demand, there was so much pressure, if we're not breaking past it, then it's not likely to go up. Do you know where I'm coming from? And we don't do that, so we're likely to come take out these points as liquidity. And if we check, what is that trend line liquidity, right? Watch us get a little movement here and then still break it. See? So we've taken out the trend line liquidity and then we've gone and broken this portion here. Okay. So we use this as liquidity basically. We just didn't induce the whole point because this was the causational one. So we induced the correlational one, which failed to make a high. Right, this one failed to make a high. So we took that out. This portion here, took that out, made a high now. So now we have a demand zone. We have internal structure following this internal structure. This internal structure, right? Mitigation, we're looking for a new high. Now we've got that new high internally. We went from this low to this point here, breaking this portion here. What broke it? It was this point here. This led to that. So if we go on an M5 now, we know that we can have this as demand zone, right? And we also have liquidity here. But then at the same time, we could also say that this point was a whole move here. So we can also come down to here, but this will be the decisional. So now we monitor the decisional. Do we get a low time frame confirmation? Let's see. Got a low time frame. Do we get a low time frame confirmation when we tap that? Let's see. Okay, we've broken this now. We've broken this portion here. So we have to know that, we're carrying on the move. Hence why we come back down and mitigate this last point here. So this point, we're expecting a new high. But if it doesn't, then we retrace. It's perfect. We make a new high. Same thing as this went, made a high, came down, failed to come down, make a new low after mitigating this, and we broke it. So now this becomes your new main push, and you're looking for demand zones of that for price to come, mitigate, right? Ideally, probably somewhere like here. But we also have to know that this whole thing is a main push to come from, and that demand zone still is. So let's see, and we have liquidity here now. So let's see, mitigate it. But this could also go and make a new high. You just have to be aware of it. You don't know what it's going to do, but that's why we use low time frame confirmations. You can come from. So now look, this fails to go higher. We come take this liquidity. Remember, this was the causational demand zone, so it could still hold, right? It fails, so we know that. Cool. Now we're coming down to the extreme. Where's the extreme? We know that from this point here is where we went all the way up to this point here, but we also had this point here making us go all the way up here. So this is actually a causation and not this. So we can do this, right? And we have the liquidity, these being the liquidity. Let's see what happens. and then we explode. So ideally we use this. Obviously I just did that. This basically goes like this, down, down, this portion here to here. This basically technically mitigated it, and then this portion here went up to this portion here. So when we came up, this is basically where the main push started, basically where I marked my demand zone before. I just didn't qualify properly, but anyway, we tapped it and made a new high. So you have up, down, up, internal trend following external trend. And now we've fully broken this portion here. So now this whole thing will be one main push on what sort of time frame? On an hourly time frame. Let me just remove all of this. So from, as I said, from this point here to this point here, this being the extreme, this being the decisional, and we've broken structure officially. So now we know that we're going up. We're going up, and obviously price is still on the main push. Still on the main push. Main push is kind of retraced a bit, right? Taking out all of this trend line liquidity, didn't tap into this portion here, which was the decisional that led to this being broken, right? And we're still going, we're still going, we're still going, we're still going, we're still going and going and going and going and going. I'm gonna see if we want to actually come down to, and we don't. So now, where do we sit on EU? We know that yes, this point here made a high, but we've come and mitigated it, and we haven't made a new high yet. So this portion here, we're waiting, but it could break, right? Because we know that the official objective is actually at this portion here. So this is likely to break. So when you see the internal ranges, like let's say M15, let's go and find the range that actually changed the shit, that changed the direction for you guys. It would be this point here. This point here was broken. You could say the whole point right here, for example, the same thing. So that there, we actually broke that. It was, let's see, one low, high, low, high, low, high. So we can use this one, right? And we know that Monday when EU opens, price could simply just do this. Oh, price could simply just do this, tapping into this portion here, and then we have a different story. Or we could just do this, break this, come lower, 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 and maybe because this failed to make a high, we break that, right, and come all the way down to this portion here, right? Or, but this has already been mitigated and it's failed to make a high, so we can come down, mitigate this portion here, and we know that obviously that would not be a decisional. In fact, that was the decisional that broke this. These are all just internal. So this will actually change the direction. We can come here and then do something like from here with a low time frame confirmation, go higher and reach this portion here, and then maybe come back down. You can come from all break that and then go higher. But that's essentially how you use time frames. Just remember, I know this video has been long enough, but I had to kind of make it long so you can understand different variations of it. That basically what you're looking for is a direction, which is daily and weekly, right? Find your direction, then you use 4 hour and hourly to find your market structure, right? And then you have your M15 to find your intraday cycle within that market structure that you marked on a 4 hour or H1. And then yeah, M15 or M30, it doesn't matter which one you use, just that time frame. You can even use 10 minutes as well, and then you use your 5 minutes, 3 minutes, 2 minutes and 1 minute for your entry confirmations, and you trade them. But it's better, I found that it's better to use structures like the 4H, right? Market structure like the 4H and the M15, right? When you've got about 4H and an hourly, and then using 4H and an hourly, and typically M15 and M30 structures, some of them get violated, right? They get induced. Like for example, look, this one here went up. We see how you see that got induced, and then after that, that's when we decided going up. So yeah, you want to trade with the 4H or the hourly structure, and obviously use your M15 and M30 as your direction as well, but they're just your immediate intraday structure, but you have to read it with context with the higher time frame structure. And your higher time frame is essentially just the hourly and a 4 hour. To that, the higher time frame of that, for you to find the bias of that, you use the higher time frame of the above, which is the daily and a weekly, and that is simple. That's essentially how time frame alignment works. So yeah, man, I want you lot to go in your backtest and trading view or FX replay and backtest this. Just me showing you this alone. In fact, do it as I'm speaking. Have your charts next to you and do it as I'm speaking. That's what I used to learn. That's how I used to learn. Because now when I'm saying it, you're seeing it for yourself and you're building that muscle to actually see this daily. And bro, trust me, once you do this, you're going to start seeing some changes in your trading, because now you know what structure and what demand zones to actually use during your session, and you're not just marking out a 4 hour point of interest and you're waiting, for example, this one here, let's see how long it would have took for us to come and take this trade, for us to go up. Let's see, where's my ruler? So from time price broke this portion here and you was waiting for price to come down here. Let's say it broke it here, right? So from that time to here where we actually tapped it, that's 15 days, bro. 15 days for you to be able to find a trade. And this trade here, you know that it could potentially even fail and tap into this portion here, induce this point and tap into here, going higher. But 15 days just to wait for a trade, that's long. But when you understand this, that yo, on a 4 hour we went and broke structure here, then we broke that structure again. This portion here is a new structure because it took out this portion here, so we can use this demand on an intraday cycle M15 to trade this, to make this a new high. Then again, the new day comes, you can trade this demand to go higher until we reach this official move. This is the decision that broke this portion here. And you know that, yeah, that's what you could do. But yeah, man, I hope this helps.